Hey everyone, happy Thursday, February 5th. It's a little after 11 a.m. on the West Coast, and it's time for another market update. We had some turmoil in the government with another government shutdown looming on the horizon, and then it got avoided. So thankfully, that was a quick one compared to the last one. We don't want government shutdowns. That obviously interrupts reporting, that messes with the markets. So the markets don't like that kind of stuff. So thankfully, they were able to come to their senses and avoid that for the better of all of us in this country. Next thing, it is jobs week. So again, the two things the Fed is paying closest attention to are inflation and jobs. No inflation data this week, but we did get a whole slate of jobs data. We did not. We were supposed to go get the BLS Jobs Report tomorrow, but because of that government shutdown, they've delayed that till next Wednesday. But we did get a bunch of different reports. So starting with ADP, so we got the ADP, which is private payroll data for the month of January, and that came in at 22,000 jobs created, and that was supposed to be closer to about 50,000 jobs created. So a weaker report. They had zero gains from small businesses. Looks like losses from large businesses. So any gains they did get was from the medium-sized businesses, but overall, it didn't paint the strongest picture for the private payroll jobs in the month of January. So that is something that is good for mortgage rates. Again, the more we see jobs weaken, the more likely it is that the Fed will cut rates to stimulate the economy. So this report came in our favor, which was a positive thing. The next one we got was today. We got the JOLTS report, so job openings, which tracks jobs that are available for people out there for the month of December. And as you can see, this fell off way down. It was supposed to come in around 7 million, came in around 6.5 million. They also made a negative revision to the previous month to bring that down even lower. So as you can see, going back to May 2022, you can see that straight line just heading further and further south. So again, not the strongest. If there's not a lot of job openings out there, that doesn't necessarily mean our job market is strong. So again, a point of data in our favor as far as the market's starting to look at the labor market as a little weaker. So that was a good one to see. And then the other couple ones we got today, we got the Challenger job cuts, which tracks basically corporations laying off people, and that jumped to 108,000 in the month of January, where the previous month or it's supposed to be about 45,000, and that was about 3 times as many as they did in December. And generally there is more job cuts in January coming out of the holidays, but this was actually twice as many job cuts as last January. So again, doesn't paint the strongest picture of the job market in this country. And then the last one that we're looking at is Revelio. Revelio got some popularity in the last shutdown when we had no data. Again, this is private. They're looking at a bunch of different points of data and coming up with their own job numbers. And this came in at negative 13,000 jobs for the month of January. So ADP said 22,000 created, which wasn't that great. Revelio was actually saying there was 13,000 jobs lost. So again, all this painted a pretty weak picture for the job market, and the markets are kind of reacting positively to that. Again, don't want to see people lose their jobs, but basically, as we talked about, for the Fed to cut rates, we kind of need inflation to come down and jobs to get weaker. And so jobs getting weaker is one of those things that we need. So that's why the market's reacting positively and mortgage rates along with them. Next thing, so another piece of job data we got today was initial jobless claims, and that was supposed to be about 212,000. People filing for unemployment for the first time, and that came in at 231,000. So that jumped a bit. Still pretty low, but it's been closer to 200 the last month or so. So that jumping up gave people another set of data to look at and say, hey, the job market is starting to look weaker. So again, all positive for mortgage rates. So that was good to see there. Not good to see for anybody that did lose their job. So where does that leave us? So the average 30-year conventional, going back to last week, according to this lender survey, was 6.16%. Today is 6.17, but I just got an alert from my company that they're adjusting rates down a little bit further. So I wouldn't be shocked if that 6.17 number on this survey comes down a little bit more, maybe to 6.15, 6.14, somewhere around there. So head in the right direction. But again, we really want to get below that 6 number. That would be really good for the narrative. It would be really good for the markets. It would really be good for transactions. So let's hope that the data keeps coming in our favor and rates keep coming down. Next thing. So again, important dates coming up. First, we got the BLS Jobs Report. Like I said, that's next Wednesday. That was supposed to be tomorrow, but that's next Wednesday. So that's the big one. That's the one that hurts us the most when it comes in hotter than expected. So let's hope that data, backs up kind of what we're seeing in all these other data points, which is a weaker job market. Unemployment going up would be a positive for mortgage rates once again, because again, anything that shows, the labor market being weaker is going to be good for us. About 9 days after that, we get PCE, we get the Fed's favorite form of inflation. And between then and the Fed meeting on March 18th, we're going to get a bunch of, we'll get another BLS jobs report. We'll get a bunch of other data. But that's basically what we need to see. We need to have no craziness in the world. We need to have inflation continue to moderate or come down further. And we need the job market to cool off and for the Fed to realize that, our economy isn't as strong as they might think it is. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, I hope you guys have a great week, everybody. Thanks a lot.